you've got an overheated market that probably needs a reprieve. Good afternoon, everyone. Welcome back to the CommStock channel. I am Relph with CommStock Investments. Going to do something a little different today. Going to look at some broader term technical outlooks for a few of the major markets, especially those that we're dealing with a lot of clientele in, specifically in the ag sector. Corn, soybeans, cattle, feeder cattle, of course. And we saw some movements today that make that a little more enticing. So we'll take a look at what's going on there. Wanted to let everyone know, if you're not a subscriber to the CommStock report, some of this was talked about this morning. We do have a subscriber only video going out in the afternoons now as well. Worth checking out for a free trial. You can go on to commstock.com, get a 30-day free trial, see if it's something you'd be interested in, at least give it a shot and see what you think. In this afternoon's subscriber-only video, Brian Grady will be talking about how things wrapped up for the week and kind of looking forward to what's going on next week, particularly with regards to the USDA reports coming out on Tuesday and providing some insight there. So definitely worth taking a look at least to get some insight on what's going on that front. As I was looking at things here over the last day or two, I started to notice some patterns developing and wanted to take a look at that. Right now, I'm on the corn continuation chart. And this is going back to the 2020 low. So this is your April 2020 low, the COVID low when we hit $3 in front month corn. And we picked up a couple of key points along the way. So this trend line is pretty defined. And this week, we went down and touched that trend line in the September contract. Not to say that this will hold, but it is significant. The algorithms are going to key off of that. These are lines that are going to be drawn on virtually every technician's chart as a potential hold point. If they give way, then we're talking about multi-month lows back at 360.5 on the continuation chart. That's going back to last August low. Meaningful lows are often made in August, especially when you have a crop that's in good condition. And we've talked about that in our written reports as well. This is something that makes sense from a fundamental standpoint. And as we look at this crop right now, it looks as good as it could possibly look for the bulk of the nation. I could see those numbers reflected in the reports next Tuesday. But at the end of the day, it's hard to go forward when you're at such a high point anyway. So we start to sometimes peel back from this point, marking significant lows at this time of year. And we may be seeing some of that go on. But that long-term trend line going all the way back to 2020 is definitely notable. We did achieve it almost perfectly this week. That low that we saw this week at 375 in the front month is going to be key short-term. And then the 360.5 low would come into play if we do take out the trend line support there. So keep those numbers in mind as we move forward in this corn market, at least watching the front month here. The numbers change in the December contract, of course, but we'll cross that bridge when we get past the month of August and get September into the delivery time frame during the first 2 weeks of the month of September. In the case of the soybeans, kind of a similar setup. You go back to the 2019 low when we were in the midst of the trade war. That was a significant low point when we hit 780.5. Then you come forward to the 2020 low post-COVID at 808.25. And then you actually pick up another couple of contact points as we got into 2024 in August of 24, when again, we made a meaningful low in the corn, did the same thing in the beans. And then we tested the trend line again in December of last year. We got back to that in July and testing it again here in August, currently sitting right at that trend line. You can't even see the horizontal bar on this candlestick chart, but we're sitting right at this trend line support in the August soybeans on the continuation chart. This is going to be critical to hold short term. If that gives way, then we have to go to a contract by contract basis and look for where the next support levels are going to be. In the case of the November contract, that's going to be at the 971 mark. That number was hit back in April of this year. If we go beyond that, then we have a consolidation low or a spike low at 961 that was posted in December of 2024. So again, flipping back to the continuation chart, looking at this trend line, this is now a 6-point trend line, pretty significant stuff here. Again, you have to look at this like the algorithms are going to be trained to look at it. This is at least a point that we could look for some kind of short-term support. Not to say that it will hold, but we definitely have to give it some respect because it has proven itself time and again along the way. Now, flipping over to the talk of the marketplace today was certainly the feeder cattle. Every contract of feeder cattle through May of next year finished limit lower today, trading down $9.25 and giving us expanded limits of over $13 when we come into the trade on Monday. I was looking at a few things on the continuation chart here for feeder cattle. Again, like so many other markets, and especially in the commodity sector, we made significant lows in April of 2020, COVID low. Now, I threw a basic retracement up to the recent high, which was posted this month. We just made new all-time highs here yesterday before this pullback today. Looking for where these retracement level supports might come in, and even the very first retracement support is going to be down at 291.5. Nobody wants to see that pullback, let alone to get down to the 38, 50, 62% retracement. So then what else do we have to look forward to? Well, there's some moving average support along the way. We are outside the Bollinger Band right now. We need to probably dip back into that and maybe at least test this somewhere between the 4 and 15-day moving average. That would also have us down in that range of that 23% retracement around the 290 to 295 area, depending on where you're. Otherwise, longer term, to maintain the uptrend that we've been holding for 5 years now, coming up on 5.5 years, this trend line is clear down here right now, sitting in the 230s. I don't expect that we'll see any kind of a pullback like that or even close to it in the coming months. The cattle market fundamentals remain very strong. I don't even know that we're going to see any kind of a significant low in here based on the pullback that we saw today, barring some major fundamental trigger. Right now, it seems there's no news out there that's causing any of this. We're not seeing the Mexican border being reopened. We're not seeing tariffs being peeled back on Brazilian beef imports. None of the triggers that would cause a dramatic move are being reported at this point. That's not to say that maybe there aren't some things occurring that we've just not seen out in the public yet. But right now, the market sentiment remains very strong. The overall fundamental storyline remains very strong. Supplies are quite limited. The packers are having to bid up higher than ever before for the cattle. And so far, we've not done a lot to impede consumer demand for U.S. beef. So right now, again, I don't see anything to say that this is any more than a flash in the pan. We've seen this time and again. I'm going to put up the August contract specifically and go back to the daily chart just so we can see what's happened. Whenever we do see these breaks, we come right back, rally to a new high. Then you get a hard break, rally to a new high. And we've done that time and again. I don't see anything to tell me that this is going to be any different than what we've seen in times gone by. Honestly, we're just trading right back to the levels we were late last week. So no damage done in any way. You can see we're still maintaining a very nice uptrending channel. I just don't see any cause for real concern based on today's action. Now, if we gap lower and trade to expanded limits lower on Monday, then we've got some chart damage and we've got something else to discuss. Right now, I don't see that as being the case, and we'll have to play the trend for what it is and hope that we're going to see some kind of a rally back here. Otherwise, there's going to be a lot of folks in a lot of trouble with the amount of dollars that are floating around on these cattle right now. Flipping over to the August live cattle, down $6.20 to finish the week at $232.55. And again, that's just right in line with where we were trading towards the top end of last week's trade. Similar story. Uptrending channel remains intact, no major damage done, and now we're running behind cash in a significant way after the pullback today. So the basis remains intact. It sounds like we've had a little bit of 245 cash traded in Nebraska. I've heard as low as 240 traded in Iowa and as low as 380 dress trade as we're coming up on the end of Friday here. I don't know if those numbers will improve with this pullback in the board. Now the basis is a lot hotter, and there may be some people trying to capture that as they move cattle out to finish out the week here. So all in all, my takeaway after looking at some of these longer term charts and kind of putting a pencil to it and realizing where some of these trend lines fall into place and what's been going on with the defined trading ranges within these markets, it looks to me like there's reason to think that maybe we've seen a short-term low in the row crop markets. That could be negated as early as Tuesday's report. We'll have to wait and see what data the USDA releases. And in the case of the cattle, you've got an overheated market that probably needs a reprieve. We know that. We know that prices are the highest we've ever seen and a pullback is warranted. However, fundamental storyline has not changed, and barring some major news, I would say we resume the trend and continue to trade within these uptrending channels in both live and feeder cattle as we go into next week. If headlines do come out over the weekend that we're going to exempt Brazilian beef from the tariffs, or that there's chatter about reopening the Mexican border, or worse yet, if there's New World screwworm detected within the U.S. borders, then we're dealing with a completely different market dynamic, and who knows how far we could fall. Hopefully not to any of these major retracement levels or trend lines, as like I said, there's just so many dollars tied up in these cattle right now. This would be the end of many operations nationwide if we saw those kind of pullbacks in a real short-term fashion. I appreciate you joining me for this episode on the CommStock channel. For producer Breanne Jenkins, I am Eric Relph, and we will see you next time right here.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.